Okay, what's going on? What's going on? Good evening, good evening. So this is going to be the trade review for Monday, June 15th, 2026. And I'm going to be going over the top-down analysis, so what we've seen from dollar index, right, down to higher time frame futures indices, and then the position that we actually took uh, during the New York Open today. Okay, so we ended up finding buy positions on MNQ, and the reason being, when we look at the top-down analysis, make sure the audio is okay. Okay, cool. So when you look at the top-down analysis, I think I have to reload some of these. Uh, okay, so weekly, daily. Okay, so when it comes to dollar, we look at this pretty much from how the market moves from Wyckoff perspective. And so a lot of the redundance that I talk about is how we close here on dollar index here on the far left, right, on that weekly bar, how we close higher here, and then we slowly corrected back into the FEG, back into the demand. Then we created this um, equal lows here, as you can see on the middle screen, right? Coming into these 9760s, we created a level support, equal lows, and price rallied back up to go higher than that gap area that we had been looking at. And so we were pretty much seeing this and identifying this as signs of strength. And so looking at this weekly, even how it's turning on now, going into the overnight, I would like to personally see a breakout eventually of this area to then attack 102. So what that could mean for anything XXX USD, right? So XXX USD could be things like XAU USD, right? Like so gold, right? It's things like that. So they can really affect if the price of dollars go up, those other assets. Okay. And so our bias coming into today was we wanted to see, me personally, I wanted to see, oh, sorry, I don't know why I keep doing that over here. We wanted to see Monday. We wanted to see this bullish response off 9950, right? Because we figured if we can hold 9950 here on weekly and daily, that we can make our way up to possibly 130, like 150 level, half level, right? And then if we can slip that level and show signs of strength, then I definitely think we could hold. Now, looking at like more of a 4 hour directional play, you can look at it from just this perspective here. How I look at the range is it's like you have this is your low, this is your current high. And so by being able to fib that area, right, I'm still seeing this in the momentum of bullish structure. Now, if price was to come below, right, like start to make its way down below this candle like this, and I can go to a line graph and see the break of structure, then I would consider it bearish, right? But until then, I'm focused on this candle here, right, being that demand area, right, where price shot up and just destroyed all the liquidity here in this zone here, right? And so it's still showing me signs of strength. Okay, and so we could be seeing some liquidation when it comes to futures and some of those CFD positions that we were looking at today, right? We could. Now I'm going to show some higher time frame understanding that I'm looking at from a comparative strength analysis perspective. And so when you're looking at let's go back to dailies. When you're looking at these dailies here, YM here being on the far left, ES being on the middle, and then NQ on the right. Now, understanding higher time frame context along with market maker models and just structure overall. All right, supply demand, where orders are sitting, how people are seeing the markets opposed to others. Right, there's a way, a unified way that some people see it. Right, and they play what we call retail, and so they play off what they see in their emotions, right? And so those are the individuals that we actually can capitalize on, right? Because that's something that you develop as a skill to overcome as you continue to do this, right? And so looking at the dailies, right, we were looking at the drop. I had already seen from here, this was Thursday of last week, June 2026, right? We've seen this bullish engulfing here on ES in the middle, right? Bullish engulfing here if you guys are looking at YM on the far left, and then a bullish engulfing here Thursday, the 11th of June 2026 on NQ as well. And so we ended up finding buys, I believe, on Thursday. I believe we even found some on Wednesday. Tuesday wasn't the best day last week, and then we did find buys on Monday. Okay, so to see this, continue up, we know, right? Like based on the buys that we took here inside demand, the 29,400s up, right? We know from this zone, this area, that the buyers are having two options what they're thinking here, right? They're thinking is price since it closed lower than here because you got to know where structure is, right? Because that's a break of structure. People don't believe in breaks of structure. They're real, okay? And so understanding how this makes a new lower low, that's how you can start to identify a V-shaped recovery that can go back and fill an imbalance like this, right? And so um, if you look at the market from the new week opening gap, so NWOG, right? That new week opening gap, it gaps. So Friday's price closed here, and then it gaps up from there. Let's see how many points that was. I think it was like 150 from what I remember. All right, so let's see here. So from here, yeah, it was like 150 points, right? And so crazy gap, right? But now going into this week, there's two things that I'm thinking. Either, right, because there's only so many things that can happen in trading, right? This is NQ in the middle. Okay, either we're going to break higher and make all-time highs, right? Or, right, the only other option is the price could start to break down inside of supply, right? This is our supply candle here, okay? Could start to break down back into supply and go back to the new week opening gap. And that happens on both, right? Now the key is going to be for me personally is like how YM is going to react, right, on daily and that new week opening gap. And because it's delivering all-time highs right now, right here, right, and we're in supply on these, are we going to find the juice to push higher? That's what I want to see. Okay. Um, Now looking at those 4 hours, right? I believe where did I put the 4 hour? I think I was looking at that on another screen. Looking at the 4 hours though here, let's actually go to those, and I'll just drop back down into the 1 hours. Okay. Okay, so looking at the 4 hours too, I use this for directional play. Now, something that I personally like to use, right, is these uh these models. I'm about to pull one up here really quick. I was trying to find where I put it. But these buy maker models, right? ICT teaches them. There's lots of different people that teach them. But I've found these different nuances by layering over a couple individual strategies and then seeing that they really, complement each other. And how I found it was these two individuals were actually arguing on Twitter about who was a better trader. And so I started looking at both of their concepts and I was like, wow, they actually, if they would come together, they'd be pretty crazy. And so let's see here. Okay, so I'm trying to bring that up really quick. So I used it earlier today at some point. Okay. So just understanding what we did on NQ. Okay. I talk about seeking liquidity. All right. So I talk about this all the time. All right, and how you want to play the right side of the V, right? And how one price and spot A can be like, let's say you bought when price was jackknifing and destroying people at like 28,800, and then you started to really see it that, a little bit later in that Thursday where it's on the right side and just really pumping up, and then you end up buying like the 29,210s, right? And so something that I teach is how to find these uh, buy maker models, but how to play inside them to get the best R multiple positions, right? Because you have to understand where demand is. And we were taking buys inside this area here. This would have been 9 a.m. We were taking buys when price came down into 29,000 last week, right? That was the ones we blasted up, okay? And so at this point, as you can see, when you look at this model here, essentially like this area here is where the low risk longs first leg accumulation is, okay? Now, inside this area here, as you're starting to push up, you're starting to get that second reaccumulation area, and then you'll get the push on through that ends up taking the previous highs, right? And so we found the seeking liquidity area, right? We found that area we were buying on that Thursday to go up. So it's all one bigger picture, okay? Now, going into today's entry, the reason why I wanted to see buys, right, was because before the open, this was 5 a.m. right here, 5 a.m. going into the 9 a.m. close. Price was already closing higher, right? It was already closing down the range. It was already closing into the supply. So essentially when I was looking at this on NQ on the far right here, what I was looking for was this to be an area of supply and possibly buyers from this area from Thursday the 11th to start to exit some of their area, some of their buy positions, right, and liquidate. But if they didn't, right, then I was anticipating continuation through on a bullish continuation, right, and the same thing with ES, right, ES in the middle. Same thing Thursday. If you really focus on the candle I'm talking about, we started looking at this as our demand candle, and then we started to buy positions around 9 a.m., 9:20 or somewhere in there, but it was definitely in that 29,000 zone on NQ. And then at the same time, as you can see, if you're following supply demand, you're understanding what you're seeing, right, from the price action, that buy maker model, right, then you're starting to see the same thing. And then at the same time, right, 9 a.m. is where we were buying, and I was calling out buys on ES as well, right? And you can see if you go over and look at YM, right, this is a comparative strength analysis, right, of these things happening over and over. You can see it happening here on YM as well, okay? And so I'll dive into the position that we took today very quickly. Let me move this box out of the way. But just kind of giving you guys some more context from like last Thursday, how we were finding buys to get up to this point and reading this on the 4 hour directional play, and the overall markets are all moving in unison. Okay. Now, at the same time, right, I've called out quite a bit the breakdown, right, of oil, right? As oil goes lower, a lot of times in this market, NQ starts to go higher, right? And vice versa. Okay. And so we were looking for this to come down. I also have a document for this really quick. Give me 1 second that you can use. Okay, let me see if it's showing up on here, 'cause sometimes they don't show up. So for me on this, look at it like this. Okay, this was your low, like these are equal lows too, $55 a barrel. And then price does what? Demand is greater than supply, right? So price rallies, right? Goes all the way up to 110. I believe it was inside the supply candle perfectly, right? 116.50, right? So we were anticipating something like this. We were anticipating individuals that were trendline trading this area here, right, to get just slaughtered at some point, right? There was only a matter of time. Now they really, made it, I would say, difficult in how they put this equal low in, right? But there was lots of news and other, catalysts that had come out in this time that made this price do this as well. Now, when you go back and you look at that picture, let's see here, where did I put it? When you look at this picture, right, and you understand, okay, demand's greater than supply, prices overbought, people were trying to, buy in the highs here in this situation. Everything above this zone here, 80, $85 a barrel, everything up here is high, right? You're above the 50% of the range, okay? And so what I was anticipating and been saying the last few weeks is I follow a lot of different influencers, and I take a lot of screenshots and folder a lot of their data here on like Notion. And by having this one individual that I do think is a pretty good trader, they were selling the 102 area, right? So they were basically taking sells on CL, right? But let's just say oil. They were taking sales at 102, and then it come to this Friday here, May the 29th, 2026, and I've seen them on Instagram saying, freaking out. They were up almost $60,000 on shorts, and they were freaking out inside this demand candle. Now, understand though, this demand candle is very high on the range of things, right? We still have the markup area that we need to go fill. And so seeing this individual get out of the position for those next 3 days, oil, right? This was Monday, Tuesday, Wednesday of that next week. You've seen it shoot back up to the 94, almost like 96 price, right? And I know that at that point, when you sold 102, you felt great because you also sold with the collective, right? Like when you sold that 102 position for a profit, a lot of people, like they had to have buy positions filled. A lot of people did that as a collective, which we've seen. Now we've seen the market come up to 94, 96, create that supply, create the order block, right, for the or for the ICT traders. And now price is doing what? Supply is greater than demand, and price is starting to mark down back into the inefficiencies. Okay. And so for me, as this continues to do this, obviously, here in the US, you'll see lower gas prices. We talked about prices when they were like $4 here like a month ago. And we talked about them getting to 3 and possibly now like $2.85 if we start to really push lower. Now, I'm not a financial advisor and I'm not saying those things are going to happen for sure, but we've been seeing them change and get all the way down below $3.20 here in Texas. Okay. Okay, so going over today's position fairly quickly, but just kind of building the bias of what we've been talking about inside the Discord. Okay. Okay, so I'll go from a 15.5 perspective. I showed you guys everything when it comes to, you know, where we were at when it comes to like a 1 hour time frame, right? We were in a place where I wanted to see continuation, or I wanted to every time, ever since we got past this area here, 30,555, I wanted to see if we could sell off at that point back to the new week opening gap. Okay. So right now, my goal, it's only Tuesday, is to possibly still see that delivered at some point. But we'll see how, the overnight looks once we come back to that. Now, looking at this, okay, this red line, all this is was just yesterday's close. Okay, so I'm going to go down to the 15.5 so we can kind of really dive into the price, and then I'll jump into the 1 minute as well. Okay, now, one thing that we really focus on is a point of interest. So it's going to be your London Open, right? When most player versus player environment is really active, right? It's going to be at the London Open and New York Open. Like those are some of the times you're going to see some of the best moves in the market, especially the New York Open, where we play. Now, where we ended up finding trades, I'm going to look here too as well, because the first area that we called out was at 840. Okay, so where we ended up looking at in the overnight was you already had to have this in your mindset. Okay, price from the overnight was, by the time we got to New York Open, which is this blue line here, it was already up 537 points on the overnight. So I was kind of anticipating that if we did shoot up at New York, like we did here, like this is the first 5 minutes of New York, 8:30 to 8:35, we shoot up from almost 60 handles in the first 5 minutes. Okay. And so what I was anticipating is at some point we were going to break down, but the only time I was anticipating the breakdown, right, was going to be once we got up into like 30,000 780s. Okay. And if you look to your right over there, 30,000 780s is pretty high up there. Okay. But what I'm looking for, right, look left to get right, is you got to know where your supply candle is, right? So this candle is my 1 hour supply candle that I'm using as a point of reference for this area, okay? And so as you can see, when I go to the end of day for yesterday, right, at this point, 845 going into 850, price is already delivering in the first 15 to 30 minutes of the open, right? Because it's 845 going into 9 a.m., right? Price is already delivering into the 1 hour supply, right? So that area was really key for us and when we came into the market. Now, where we ended up finding our position, right? Because we did end up finding a buy position at the New York. We ended up finding a position at 9:40 a.m. We ended up finding one at 9:40 a.m. and we found one at 8:40. Excuse me, I said eight. I was looking with my friend that's from the East Coast, and his price was that. But okay, so we found our position at 8:40 a.m. Now I'll go on the 1 minute and show this. Where do I have that? That's what I was looking for. And break down the exact area, like how we ended up seeing it, because it stopped us out in the beginning, and I'll show you guys what can help on that. Okay. Oh, and then we did find positions at 9:40. I was just trying to make sure. All right. Oh yeah, nine. So it was 8:40 and 9:40 today. They were the best positions. Okay, so I'll go over the first one from New York. Okay, so here's the 1 minute. Okay, and we'll look at open and we'll look at 5 here. Okay, now first position that we took was at 8:40. Now at the open, as you can see here, this is the open, New York Open, 8:30. Everyone likes to play equities open, right? You've got to be patient. You can't just press a button and get in, right? Because in that first 5 minutes, there's lots of people putting in orders and lots of opinions being formed, and you just kind of have to let the dust settle. Now, first candle, right, 8:30 to 8:31. That one candle was 30,634s up to 30,667s. Okay. And so that's almost a 30, 40 handle move right there. Now, when price starts to take off like that, I like when you're seeing it like this, it just takes off and starts to run off. I need to see price establish some demand, okay, for me to play continuation. Now you already know I wanted to see us move up to 30,780. I called this in the Discord, right? And so what we ended up doing when we took our entry is price came up like this. I'll kind of run you guys through the replay mode here. Right, we were looking for price as soon as this formation looked like this. They made the higher high, they made the higher low here, and people were starting to sell this 1 minute area, and then it V-shape recovers and engulfs and closes higher high. At this exact moment, I'm starting to frame up this candle. Okay, now my typical trade is going to be 20 handle risk for about a 60-point gain or a 100-point gain, right? So 3 times your risk or 5 times your risk. Now, when I'm looking at this formation right here, and I'm already knowing that I'm looking for bullish continuation up to a higher time frame, 1 hour, 4 hour area, I'm thinking from risk to entry. Okay, so I already have these preset from 1 to 3 to 1 to 5, and then I want to know the low on this candle. If you need to do this, you can press and hold, like hold on the candle, and it shows you the low, right? The open, high, low, close. So the low on this is 30,655. So I want to put my risk at 30,000. So I want this purple, right, the bottom of my risk here to be at 30,655, correct? Now, as you can see, when I told the Discord, when it comes down to the 30,670s, we're going to get ready as it starts to deliver inside demand. You don't want to take the trade unless it's in our special area. Our special area is the candle, right, that V-shape recovers and engulfs, and we want to play it a specific way uh, that I go over in the Discord, but just so you can kind of see how it is, we want to play below the halfway mark of the candle, right? So there's specific things that I show in the entry strategy, but you don't even need to be ready to pull the trigger until it gets into the 50% value area, right? And so price comes down into this and we're triggered into the trade, right? Like we've seen it come in here and I like those 30,000. I think it was the entry I ended up taking was like 672 somewhere in here, and then had the risk on this 5 minute low. Now, sometimes you can get stopped out before the actual move, and that's okay. But if you're reading the candle closures, I'm going to show you guys on that 5 how you're going to be able to see uh like how to stay into that trade and continue with it. Okay, now that first 5 minutes, as you can see here, 8:30 to 8:35 closes strong, and then you get 8:35 to 8:40 closes strong, and then you get 8:40 to 8:45 is about to take off, right? So a lot of people play this position here, but when they lose the position, okay, so see how it goes like this when it goes and it takes the liquidity, right? It's so fast, it's almost like you can't even see it on there, right? It goes and takes the liquidity. Now, our risk was in that area. Now, on our rebuy, the reason why I rebought this area was because I already knew the structure was bullish. Higher high, higher low, higher high, right? I love draws on liquidity to go inside my demand order, okay? And so looking at this, where I ended up getting back in was inside those 30,780, or 765s, right? Or 76, yeah, 30,680s, right? So 680s was in here. Price started to respond like really, really fast in that area. Now I like to have my risk at this stop loss low, but I also am just really focused on my 5 minute area and making sure that I'm not getting over 50% on that demand zone. Okay, so getting inside those 680s kind of was, pushing it in this area here, right? Like when you see the entry being here, but I still like it as long as I'm inside the demand zone of this candle here. So where I'm really focused is this candle right here, okay? And so beautiful entry to take us up to the delivery of 60,780s like we wanted, right? So price then hits that area, you get the new high. Now how I manage this trade, I go through the trade management live with individuals on the team, right? And so anytime you're 2 times your risk, right, at this moment right now, what that essentially means is if you're risking 20 points and you're 40 points, right, 1 to 2, right, you could actually go risk off from an entry like 680s at this point. Now, what I teach is to go for 1 to 3, so 60-point gains, or you can go for the 100-point gain, which is going to be 5 times your risk with a 20 handle risk. Okay, and that's a really good trade. But the only time I'd like to do that is when I had that higher time frame target, and we did, right? 30,770s, 30,780s. Algorithm loves 20 levels, loves 80 levels, and we were looking for, like I said, a 100-point move, five times our risk here. Okay, and price does end up going right and delivering. As soon as you get this new high here, like you had higher high, higher low, and then bam, new higher high body close. At that point, that's when you can essentially take this risk and go risk off. right? And then you can start to scale based on how I teach the trade management as well, down candles in an uptrending market, and a couple other ways. Like I said, I could go over, but essentially just at this confirmation at this time, you're also over a 1 to 3 at this point, and so you could actually scale your risk from your entry at this point if you have enough size on the trade. You could scale your risk from here up to this low here, and I would say you're probably pretty safe to, say you're taking 3 times your risk at that point. Okay. And so price continues to go up from there and delivers the area. And essentially what I was looking for here at this point when we took this trade on stream was just a 5 minute sign of weakness, right? Because every 5 minute candle, like this is the candle that we're on, we have a prior bar. If you're being aggressive, you could go ahead and trail up to here, which would be securing over a 4R times your risk, right? Or you could use like prior bar is what I teach. Or you could be conservative and stay right here and see how price delivers into those higher time frames, okay? And so price did continue to go into the 80 level, and then we ended up seeing, I believe this was the candle that kind of showed me exactly that this was the break, right? 30,780. And then at that point, I would say you probably want to scale your risk up to the FEG on the 1 minute 30,763s, just to go ahead and secure that over 4R zone. And then bam, it came back and tapped us out. So that's what I ended up doing today on the first move that I gave out. Now we were off the stream, I believe, at this point of the trade that I'm about to show next. But that was the New York Open trade that I gave on stream, and we slapped it. It was crazy. Okay. Um, Now the other entry that I was looking at, like, 'cause we were already done. Okay, so you guys see we delivered over 100 plus points on that trade, and we were out right when we started to slide our risk up under that area. Now the other area I personally really liked was this. Okay, a lot of people, um, were trying to short the market, right? They were trying to get that short in here. Like I've seen a lot of people shorting around like 9 a.m. They were trying to short like this right here. Now, there's nothing wrong with this, okay? Like these are good plays. But it's just at the same time you have to look at like what's really going on and what the context is. Ever since we played right here, right? They drew on liquidity and rallied. This area becomes an area of demand going into the future until price essentially, like if it would have done this here, right, around 9:22 a.m., if it would have come through and broke lower, and you can look at a line graph like this, right, and you start to see price start to really break its stride, then that would make it bearish. But because we're holding inside demand, guys, 30,650s up to that 30,000, let's just say 690s, right? That's showing me as we continue to close, right, that we're not bearish. Because like let's just say this. Let's say you took a short here on the 1 minute, 30,780, and you took it down to here. Now that's gonna be a good R multiple trade. Okay. It's gonna be a good R multiple trade, but at the same time, that's a 1 to 3, right? If you can get in here, this is also like a 1 to 5 getting to the demand. But as you can see, there's a reason that these shorts right here all covered inside this zone and price rallies back the other way, right? It's because of the acceptance. People weren't the buyers are defending the 30,670 level right inside the demand. They're showing what they want to do. Now, the key to this area on a continuation, because I bought this on personal, was this price right here. Okay, you had all of a sudden prices going down, right? And then what happens on the next 5 minute bar? Bang, right? Engulfing structure break, right? Complete FOMO of people just spazzing out right here. Now, at this point right here, all I like to see is the same thing, guys. Understand supply demand. This is a demand candle. Okay, demand is where you want to look for your buy orders on the pullbacks. Okay, now I also teach price and time. So I like the first 15 minutes of an hour and the last 15 minutes of an hour to take my trades. Okay. So on the continuation, I like to see a 5 minute candle like that, just really rock it like it did here. As you can even see on a line graph. Look at this. It's easy. All right. They clearly break the structure with that 5 minute push on the left side right here, right? They clearly break the structure. So you wait, right, back inside those 710, 720 levels, right, to play the structure back up to here. Okay. And so what I was looking at here was pretty much the same type of move that we took at the New York. It was just going to be basically and the timing was really good. Now, most people are playing this in the FOMO, right? They're going to be playing like if you go back and plot their position, they're playing like somewhere in here. Okay, like they're playing up and it's not there's nothing wrong with that, but like I said, they're playing in the wrong areas inside expansions on smaller time frames because they're not looking at the market from a fractal standpoint, right? And so we've seen the price come back into here, right? So go back to that 5 minute. Okay, so we had the big push up, change in the state of delivery, and then it comes back, correction, right, into the right time, first 15 minutes of the hour, last 15 minutes of the hour, and then you had your one sign of strength 5 minute candle inside that demand, right? And inside that area, I like to look for 1 minute mitigation. Okay, so after this sign of strength, after I get this sign of strength, can I see, right, after one more here, which I would have been just targeting the 30,800 level, right? I was playing CFD at this point, okay? But it looks the exact same. And so this candle printed bullish, and from that moment right there on the right side, can I identify a 1 minute mitigation? When I say mitigation, right, all I'm saying is something like this, right? Higher high, higher low, higher high price, right? So price goes like that and then holds the level. It doesn't go lower than its level, right? It holds the level, right? It just comes right here, makes a higher low and continues, right? And I could. Now, is it the timing is right? Is it in the first 15 minutes of the hour? Look at the bottom here, 9:49 going to 9:50, right? They're on the right side here, right? So it's the right time, okay? And so can I see a 1 to 3, right? Can I frame up a 1 to 3, 1 to 5? Right here, I can see this, and I'd be framing up this low, okay? All right, so 1 to 3, right? Could deliver and be attacking the high on day, right? Which is where most shorts are trapped. And that would probably take about a 1 to 5 to do that to clear the area. So could you find a 20 for a 100-point move, right? That you could for sure start to trail your risk and start to scale or just get out in that zone right there? Yes. Right. And it's just all that is just a continuation, a bullish continuation, right? Shorts it didn't even get close to going back down close to New York Open, right? It filled this little small imbalance, FEG, right? Expands up, and as soon as that does that and leaves you that demand, guys, that's the key sign. You just gotta trust it, okay? So the entry that I liked and the one that we took on stream, 840, like I said, got stopped out first, then blasted a 5R position, okay? The other position I really liked going into the same criteria that I like to see, timing, inside demand, short covering, context, all that was going to be, if you want to study some price, 9:45 a.m. going into 10 a.m. Definitely really, really good positions to find right there with the criteria. So uh, we'll be live tomorrow on the Discord for Tuesday's New York session, right? So I'll put in the description the links for the Discord if you guys want to join. And then we're going to be trading Monday, Tuesday, Wednesday, and Thursday this week and take Juneteenth off. So June 19th, 2026, we will not be trading on the live trading floor, okay? So appreciate you guys. Next time I will go over a little bit more content. I'm going to start bringing in things like gold, right? Sometimes silver. I'll probably go a little bit more in depth on, some of the ideas we have on gold, but I really just want to focus on the execution of the context and the top-down analysis into why I wanted to see the continuations on those long positions today. Okay. And so last thing I'll leave you guys with is where I think we're headed. I still think we're pretty strong. We'll see what they do in this overnight. Like if they come back and they can fill some of this inefficiency here, this FEG, right, and the 30,650s, right? So I'm gonna have to look at um, the actual price for tomorrow here. But going into the overnight, which is gonna be that 2 a.m., just seeing if they come down, or is this gonna be the 30,750 going to be the low, right? I'm looking at that right screen, okay? Is that going to be the low for the overnight to then extend up on this 1 hour through, right? When you're looking left up to like 31,000 liquidity, right? Or like 30,900, okay? To get above this high. So I'm just going to watch and see what happens tonight, but beautiful buy positions on the way up. And yeah, that's it. So I'll see you guys tomorrow on the next one. Peace.